Right, let's take a look at the market action and look at what's going to be going on. We just checked, if you remember, the United States dollar against the yen, it's going to be moving until higher, until 115.2, and then it will correct back to 114. Okay, you'll find that the sterling yen is hardly moving. Let's take a look at it. Since early morning, you'll find that it is just, this actually did 156.73, and then it's beginning to correct, whereas the sterling dollar is moving a bit. The United States dollar against the yen is moving. All right, let's see why. Let's exactly see why. Okay, so this is the trade action today. Let's just take a look first at the longer term projections. You want to look at the weekly and the daily chart. Okay, so we won't really look at these charts. We're trading on the weekly rejection at the overbought level. We're trading rejection here at the overbought level because there's negative momentum on the daily, not on the daily, on the 1 hour chart, and of course on the 15, and there is possibility to see a zero line rejection, which would mean we're going to be seeing overbought levels like here, oversold levels, I'm sorry, on the 4 hour chart. Okay, so let's get back to that daily chart again. Sorry, that weekly chart. We're trading rejection at overbought level. The same signal is there on the daily chart. This on the daily chart into an internal degree 1-2. We understand we always have to first isolate the trigger that we're going to be trading long term so that we can take correct internal trades. So if this becomes positive, strongest and heaviest of all the degree 4s, this is a C into a correction, so it's going to be a 5 swing move. You're looking at projections all the way down to 151.22. You're looking at projections, of course, a bit higher. We're looking at actually projections between 152.3 all the way down to 151.2. It's going to be a very strong move down. It's going to be very fast. It's going to be actually very sudden. All right, we expect it's only waiting for a correction of sterling against the dollar seriously at 1.38. We'll take a look at sterling dollar very shortly. But if we correlate both moves together, you get the picture of what could happen. So we want to trade this down. All right. Now this move all the way down to 151.2 or 152.7 divides actually into 2 swings. We don't really now need to look at that daily chart anymore, except to understand that at 152.7, 151.7, we're getting to see an inverted head and shoulders. That dashed red line at that point becomes a neckline. If the conditions are right, the market moves very strongly higher to 160 and the upper boundary of that ending diagonal. We're seeing a higher head and shoulders they're seeing here. Okay, for the coming months of January, best entries, if we're going to get this correction, this is a wave C. It's going to be a 5 wave swing, 4C, a C into a degree 4, 5 wave swing again. Okay, you had a 4A here. You had a 4B here. This is the first leg into C, showing here at that head. Leg 1 into C, there's leg 2 into C. Now there's going to be leg 3 into C, or leg C into C. Sorry, leg C into 4, I'm sorry. 5 swings. All right, that 5 swings takes you to the breakout lows for the month. 152.3, 151.2, or 151.3 to make life simple. Now we need to segregate the exact internal 5 wave structure, sell into it in order to be on the correct side of the market most of the time, that is. Okay, so we're looking at that 4C now. All right, and this is the segregation on the 1 hour chart of the current move up and the coming move down. You had, of course, a 1 and a 2. There's a 3. This is the full segregation on the 1 hour chart. There is an A and a B. Now there's an A and a B. This is going to be a C. This is an Elliott structure, 5 wave swing. It will observe Elliott tenets. Becomes very easy now to trade. I'm sure everybody has full perspective of this. So there's an AB. There's going to be a 1, 2, 3, 4, 5. We get 2 chances to enter. We enter into wave 3. That's wherever the first leg C. We enter into degree 4 correction into wave 5. We believe we enter the market right now 156. That is, if we go live and we check the bottom of a level 1, we enter at around 156.5. Earlier we could have gotten 156.7. Remember, this market actually rejected at 156.7, which is the bottom of a level 1. Okay, this is going to be doing level 3. Level 3 can either take us to 154.6, 154.8, 153.3, top of a level 1. We're looking at this segregation is very correct. We believe there is higher degree 1 and a 2. Internally here, there's a yellow 1 and a yellow 2, yellow 3, yellow 4, yellow 5. Everything fits. You break down into wave 3, you either bounce at that internal level 1. Of course, you're no longer bouncing at that internal level 3, so your first bounce at internal level 1 comes in at 154.10, 154.6. If you break that internal level 1, it's that higher degree level 1. We're looking at 153.2. all right, at that point this is a wave 3. There is a correction into 4. We are back again to 156.10, maybe lower, 155. We do a wave 5. This is a wave C. All wave C's are 5 wave structures. It's going to be a wave C into 4. So all wave C's are 5 wave structures. So we get to do that. We get to do that entry twice. This entry short, we expect we're going to be getting to do it twice. Twice means we're going to do another time, top short, top of level 4. This time is going to take you to 152.3, can even take you all the way to 151.7, maybe. All right, so this is a good investment opportunity. We have it here singled out. All right, right now today we get an entry at 156.5. If we miss out, we get another entry at 155.5 probably. If we're just using 1.25 of a mini, not a standard, at each, the stop here comes in at 157.6. 157.6 is right above level 8. It's a bit high. The risk is $400 for these 2.5 minutes, or 4% calculated at that point. We're going to target 152.3. We're going to target 153.3. So 152.3 and 153.3. 153.3 is, we are of course targeting in between. If you're going to hold this as an investment, you want to target level 3 at least, and level 5 if possible, and not stand out, but let us say you're going to be able to absorb all the negative volatility. So level 3 comes in at 119. If we get to miss 156.71, it would have been of course much better to short 156.71 if we can still get it. The ultimate target is just that wave 3 all the way down to 153.67, 153.27. So we're shorting to break out of a wave 3. It will break out any moment, we think. So it's time to short 156.2, 156.7. We're looking at least 154.7, most probably 153.67, even 153.3. This is wave 3.